Dave Santorelli from Santorelli Trading Exchange. Jeff Walker here again.
I'm the new guy.
Guys, in this video, we're going to go over spreads. What they are, how they make money, what's the max gain, and what's the max loss.
All right, this is a good topic because we talked earlier how I've been placing the trades Dave recommends since the beginning of the year. I don't fully understand them, but I know how to enter a trade, and I'm up 157%. So things have been going great. But when we do, say, a vertical spread trade, which I know are safer trades than, say, a straight call, I don't exactly know how to figure the profit potential.
Okay.
I get totally confused. I have like a blind spot. So if you want to bring the screen up,
let's do
and
that right now.
I'll get out of the way here.
So I have Facebook up here, Facebook charts right here, and then I have the option chain right here. So let me zoom in here so you guys could see. Okay. So now first off, Jeff, what we're going to do, we see Facebook's at 164.12 a share, right? Okay, so now let's see. So we're at 164, we're at the money here, so at the money is going to be between the 162 and 165. So we could pick, if you want a safer trade here, first off what we're looking for, see how we had the bounce, the confirmed bounce here off the 50.
Right.
Okay, so as long as we stay above the 50 here, we can make this trade that I'm going to go over right now. Your stop would be the first candle below the 50. So if we entered into this trade right now, the exit would be the first candle below the 50. If it stays above there, we're staying into this trade. Here's the example of this trade. Let's do, for example here, we could click on the April 5th or the March 29th. Let's click on the March 29th here. Let's say we did the 162.50. Let's make this for the 29th as well. March 29th. The 162.50, 165. As you can see here, the midpoint is $1.46. We have a bid of $1.27 by an ask of $1.65. So when I make a trade, guys, first off, here's a lot of mistakes I see traders making here, which is, let me change the camera there. So what I see a lot of people making a big mistake doing is they're making market orders. Guys, never ever make a market order. I was always taught that. I would tell you guys never to make a market order because if you place a market order, it could get filled at $1.27, $1.65. Most likely it's going to be at the higher end, as that's how the brokerage companies make money between the spread of the bid and the ask. So never place a market order. Me, I always go to the midpoint. Now let's see how much this trade would make here. So let's pull this up. Let's get our drawing tools up here. Let's make a green thing here. So if we see here, we're buying the 162.50 and selling the 165. Buy to open the 162.50, sell to open the 165, okay? The difference between these two strikes is what? $2.50, right?
Right, okay.
Okay, so if we're paying $1.46 for it, we're paying 1.46. Okay, first off, there's 100 shares in a contract, so we have to multiply this by 100. So one single contract is going to cost you $146. Okay? So now the max this could be worth is the difference between the two strikes, $2.50. So if this could be worth $2.50 max and you paid $1.46, simple math here, $2.50.
If it's simple math, why do you use a calculator?
$2.50 divide that by $1.46. That's a 71.23% return. So 71.23%. That's your max gain.
Okay, I want you to put up there on the screen the computation you just did.
Okay, so I did 2.50.
Okay, that's the biggest, that's the actual spread.
Yeah, that's the spread. So I'm always doing the spread divided by what I paid for.
Uh-huh.
So if this is a $5 spread, I do 5, divide that by 1.46. It's a $2.50 spread, so I'm doing 2.50, divide that by 1.46. It comes out to 1.72328. Get rid of the one there.
Can you write it on the screen, the spread divided by?
The spread divided by.
Yep. And what you
Price
paid.
paid.
The price paid. will equal the profit
equals
potential.
max gain.
Max gain, right. Okay, see, now that's very clear. I get that now. My next question would be, all right, so I think...
First off, let's go, what's the max loss here? Okay, max loss on here is going to be what you paid. You can't lose any more. Okay, so if you paid that $1.46, the midpoint here, if you paid $1.46, you got one contract. That means you have one contract of the $162.50, one contract of the $165. You paid $146.
So that's the worst you can do.
That's the max you could lose, and the max you could lose is if the stock's below the strike you bought to open. So if it's below $162.50 by your expiration date, if it's below that, you have a total loss. Obviously, as traders, we're not going to let that get to a total loss there. You know, like I said,
right. I know you always jump in and say, hey, on the rare losing trade, I don't want to lose more than 50%.
Yeah.
Okay. So cut your losses and make it up for it and let your profits run. But here, that brings up this valid point.
Yes.
Suppose, especially new guys like me, I get into a vertical spread. Right out of the gate, I'm up 40%. And even though, what did we say the potential was?
71.23%.
Okay. Already I'm up 40%.
Okay.
Part of you will say, oh my God, that was quick money. Take it.
Yeah.
Is there anything wrong with that?
Okay, there's nothing wrong with that whatsoever. In fact, you know, if you have a spread that's up, you know, 40, 50%, especially if you have a spread, if the max it could be worth is 70%, I always tell myself whatever half, you know, so if I get up to 35%, you know, I might lock in half of my trade there, okay, lock in half of my profits. I'm usually doing $5,000 trades, you know, between $2,500 and $5,000 trades, which is going to take us to our next video's position sizing. But for right now, like I said, you have half that gain there, that's 70%. You know, there's nothing wrong with locking in profits. But if you're still in breakout momentum and you have something and it expires tomorrow, you know, and you're still in the money, like I said, our max gain is if we're above 165. So if you're at 168, you know, and it expires tomorrow, hold on to it, you know, because then you're going to have your max gain tomorrow as long as the stock doesn't dip $3.
Yeah.
You know, so it depends what's going on. Now, if you're closer to 166, 165, I'd say, hey, take the profits and run there, because one day all it needs to do is drop 1% and you could be out of money there. So it's good to lock in gains. Take it when you have it.
All right. Sounds good.
Alrighty, guys. Any questions, guys? Again, you can comment below if you'd like to join us. www.thesantorelliexchange.com. Use promo code YouTube. Take care, guys.
All right. This is the one now.